This conference will now be recorded.
Hello guys, welcome back again. So now in this session, once again, foreign currency setting itself is going to be explained. As I told you in previous session that there'll be a question that what is the difference between direct quotations and indirect quotations, under which case you are going to specify your rate under direct quotations, and when we can specify the rate under indirect quotations, right? So if you're having a perfect understanding easily, you guys will be able to explain the logic behind this. So now here I'll tell you, if you talk about the definitions guys, I'll just show you here in my PPT. Look at here. Direct quotations. One unit of foreign currency shows the total value of local currency. An indirect quotation means one unit of local currency shows the total value of foreign currency. I'll show you, I'll explain you this logic. Let's suppose I told you 1 USD equals to 50 Indian currency, right? So how the rates are going to be specified into SAP? See, translation ratio, now I'm going to make it 1:1 itself. That logic already I have explained in the previous session. So let me delete these things. Now here, and 1 USD equals to 50 INR, let's suppose, Indian currency. Okay. Now, and I'll remove these things also because this is already explained in the previous session. Now here, so generally here, 1 unit of foreign currency, the rate which I have specified in the exchange rate table guys, 1 USD equals to, let's suppose, 50 INR. I'll show you here. OB, first of all, OB, BS. I'll have to change what guys? I'll have to change the translation ratio. Let's suppose here USD INR, and sorry, exchange rate type first of all M, and then here USD, then here your currency, company currencies, and then 1:1 itself I'm going to specify. Save it, Control S, and then come back. OB08. So here the rate which I'm going to specify is 1 USD equals to 50 Indian currency. Now here, so I'll just remove this rate because this rate I specified to show you guys the logic of translation ratio. Save it. Look at here. This is what the rate I have specified. So here, this 50 I have specified under direct quotations. So direct quotation shows what guys? Direct quotation shows 1 unit of direct, as per direct quotations, what is happening guys? It is showing the 1 unit of foreign currency is showing the total number of unit of your local currency, right? 1 unit of foreign currency equals to 50 unit of your local currency. This is the rate. So it is going to be specified in this way under direct quotation. It means whenever the local currency value is lesser than the foreign currency, let's suppose USD currency value is greater than Indian currency, right? Or is Indian currency value is smaller than USD, or is GBP, or is Australian dollar, right? So in that case, if I say 1 euro equals to, let's suppose, 60 Indian currency, so easily we are able to understand, right? 1 USD equals to 50 Indian currency, easily we are able to understand, right? So whenever our local currency value is smaller than the foreign currency, in that case, generally we maintain the rate under direct quotations. Now take an example. I told you about Iranian currency, right? Iranian currency here, right? So now here USD versus Indian currency. So this is like, we know, like USD value is greater than higher than the Indian currency. Now if you talk about Indian currency is going to be compared with Iranian currency, then here Indian currency value is higher than Iranian currency, right? In this case, what is happening, guys? In this case, look at here, one Indian currency equals to how many Iranian currency? 561. So Iranian currency is the foreign currency, right? Iranian currency is the foreign currency. So like let's suppose here 1 unit of foreign currency equals to total unit of local currency. But in case of Iranian currency, I am talking about one unit of INR, 1 unit of 1 unit of Indian currency equals to this 561, right? I'll just make it round figure 560 IRR. So look at here, 1 unit of foreign currency shows the total unit of your local currency. This is the example of direct quotations. Okay, let's suppose this is called direct quotations. It means we are going to specify here. Okay, generally I'll just direct quotations. Now, and in case of Iranian currency, we are saying that 1 unit of our local currency equals to, this is the total unit of foreign currency. So this is going to be specified under indirect quotations. Under indirect quotations. So when the rates are going to be specified under direct quotations and when rates are going to be specified under indirect quotations, I'll show you. I'll tell you. Now, whenever local currency, it means your company code currency. So whenever the local currency value is smaller than the foreign currency, in that case, we are going to specify the rate under direct quotations. And whenever local currency value is higher than the foreign currency, in that case, we are going to specify the rate under indirect quotations. I'll tell you, if you talk about in Iranian currency, then you just do one thing. Here, I'll first of all specify OBBS. We are going to specify the translation ratio, new entry. From, let's suppose, INR to IRR. And validity I'm going to give today's date itself, 1:1 I'm going to give. Save it. Then here, copy this one itself, or you click on new entry, and here you can give the date. Now here INR and here IRR, right? In this way we can we specify in this way, guys? So no, not in this way. So here I'll tell you now. Wait, I maintain the rate here. So not here like this, just so here maintain the rate like this only, exchange rate, and from like let's suppose your what to say, foreign currency and to local currency. Maintain ratio 1:1, validity I've given here 1508 and save it. So now in this way itself I'm going to specify the rate here. So here Iranian currency and here Indian currency, right? So now what is happening, guys? So here, okay, if it was USD, it was USD, then I'm saying that 1 USD equals to 50 Indian currency. Look at here under direct quotations. But this at the same time, if the foreign currency is Iranian currency IRR, in that case I'm saying that 560 Iranian currency equals to 1 INR. You press enter. No exchange rate conversion factor could be found in currency pair in exchange rate type because the entry is missing from appropriate table. Okay. So have I saved this? I think I have not saved. Is it saved or not? This is saved, yeah. So why it is like maintain INR, it's okay, save it here itself. The currency is locked by user. Okay, it's like locked by me here. So now press enter and save it. Yes. No, it's so now here, now this one. Okay, so look at here. One. Now here 1 unit of local currency shows the total unit of, it means 560 unit of INR. So when our currency, in the sense local currency value is higher than the foreign currency, in that case, what is happening? The rate is going to be specified under indirect quotations, right? And in case if the foreign currency, as I told you, like here USD is the foreign currency. Foreign currency is having a higher value compared to the local currency, then rates are going to be specified under direct quotations. This is how we are able to understand the value, guys, right? Because if you talk about here I'm saying that 1 USD equals to 50 Indian currency. So I'm able to understand very easily, and you are able to understand very easily. At the same time, when it comes to the Iranian currency, I'm saying no, our one unit of Indian currency equals to 560 of Iranian currency. In this way, we are able to understand easily, right? So in that case, this is because your foreign currency here, Iranian currency is having, quite lesser value compared to Indian currency, right? So this is how I'm preferring to say quote this rate, right? So this is going to be specified. This rate is going to be specified under direct quotations, and this rate is going to be specified under indirect quotations. In which case, direct quotations and indirect quotations are going to be maintained, guys. It is going to be maintained when the local currency value is smaller than the foreign currency. In that case, this value, local currency value, is going to specify under direct quotations. And if the foreign currency value is smaller than the local currency, in that case, we are going to maintain the rate under indirect quotations. I'll come back to my definitions once again. Look at here. This example I have quoted in the form of USD itself. Say for example, we can specify the rates in two way. Two way in the sense, let's suppose click on backward, and here watch this video twice and thrice, guys, then you'll be able to understand. Okay, now here, so I said 1 USD equals to 50 Indian currency. So direct quotations. Why? Because 1 unit of foreign currency shows the total value of local currency. Okay, or else in the same, or else we even here also we can specify the rate. So 1 USD equals to 50 INR, right? So 1 Indian currency equals to how many USD, guys? 0.02 USD. So this rate can be specified here, 0.02 USD. If you are going to specify this, I think the format is incorrect, so I'll have to give comma here. Okay, so 0.02 I've specified. So this is also going to give you the same meaning. Okay, a very simple mathematical calculation is there. I'll tell you here, no accounting concept is required, no accounting entries are required. You cannot say that you're not from accounting background. This is why you're not able to understand. Whatever examples I quote, guys, it has nothing to do with the accounting. This one. So if you feel that you're not the expert of accounting, then only you're not able to. I'll tell you, guys, this is a simple mathematical calculations, right? I assume that you all have studied this at least till 10th standard. Everybody are going to study like whatever the normal mathematics is there, no matter whether you are in India or Australia or UK or US, wherever you are, at least like till 10th standard, everybody are going to read out the mathematics. So this is a simple mathematical calculations I'm talking about, right? So here FP50. Okay, this example generally I don't quote. Why? Because it's going to create some confusion. That is why I quote the example in different currencies, so that you'll be able to understand. Anyway, again here, let's suppose I have specified 0.02 USD equals to 1 Indian currency, right? It means 1 unit of your local currency shows the total value of foreign currency, right? Under indirect quotations, what is happening, guys? Under indirect quotations, 1 unit of your local currency shows the total unit of foreign currency. And under direct quotations, 1 unit of foreign currency shows the total unit of your local currency. This is what the difference is. It's pretty simple. It's pretty simple, right? That is what I'm saying, that I know like 90% of you will be able to understand this in a single one example itself, but might be 10% of the people who may have some confusion. That is why I'm repeating, the examples, I'm explaining the same things twice and thrice, so that you guys should have the understanding, right? If you're having understanding, you can quote your own definitions during interview, or else you can quote the as I told you, like you can quote the example as well. No need to mug up the definitions and all. So here now, instead of 50 INR, I have specified 0.02 USD equals to 1 Indian currency. So under direct quotations, I have specified this 0.02 USD equals to 1 local currency. So 1 unit of local currency shows the total value of foreign currency. Here, if I'm going to give you a USD, and if I try to post this transaction, give your GL account once again here, 1 USD itself I'm going to give, and give a different account here, 1 USD. And if you press enter, look at here the magic. Still it is showing 50. Why? Because same thing. 0.02 USD equals to 1 Indian currency. So 1 USD equals to how many Indian currency, guys? A simple mathematical calculation is there. 1 USD equals to how many? What to say? How many US currency? Sorry, so 0.02 USD equals to 1 Indian currency, right? It means 0.02 means we can say 2 paisa, right? Here in India, whatever the coins are there, like it is called like paisa, like in foreign like cents or something will be there, right? So this is how. So here 0.02 dollar equals to 1 Indian currency. So $1 equals to what will happen, guys? Simple calculation is there. If you are going to multiply, see, calculator. Okay. Oh, it is not appearing. Anyway, so you guys can calculate here. It's very simple. What is a calculator is there, right? So let's suppose, or is like here. So I said like 50. 1 USD equals to 50 INR. So 1 INR equals to how many? 1 divided by 50. So this is how I have calculated 0.02. It means 1 Indian currency equals to 0.02 USD. Right. So now here, now and again, if you want USD equals to, then it is going to be calculated. System is going to calculate automatically, guys. 50. What do you say? INR is going to be. So now here, that's what I said. Direct quotation means 1 USD equals to, in the sense, 1 unit of foreign currency shows the total value of local currency, and vice versa under indirect quotations. 1 unit of local currency shows the total unit of foreign currency. So this is what I have quoted here. But generally, in which case we are going to specify the rates under direct quotations, and in which case we are going to specify the rates under indirect quotations, guys? Once again, I'll repeat. When the foreign currency's value is greater than local currency, in that case, we specify the rates under direct quotations. When the foreign currency rate is higher than the local currency. Look at here, 1 USD equals to 50 INR. It means foreign currency rate is better than the local currency. So this rate is going to be specified under direct quotations. When the local currency rate is higher than the foreign currency, in that case, we are going to specify the rates under indirect quotations. This is what the logic, right? You just do one thing, guys. You can have some practice. While practice, you quote some more example, you test some more example and all, then you guys will be having understanding. So this is what the difference between direct quotations and indirect quotations. The rates are going to be specified under direct quotations if the foreign currency value is higher than the local currency. This is why I says 1 unit of foreign currency shows the total value of local currency. If the local currency rates are higher than the foreign currency, in that case, the rates are going to be specified under indirect quotations. It means like I told you, like in case of Iranian currencies. Okay, even direct quotations also we can maintain. Direct quotations also you can maintain, right? If you want to, like, one INR equals to this one, sorry, one Indian currency equals to this many Iranian currency. So if you want to maintain under direct quotations, if you want to maintain like one INR equals to how many Indian currency, guys? So again you have to, so 1 divided by 560. So this much we are going to specify, this much 3 and 2 5. This much we are going to specify under direct quotations. So decimal places are there, guys, right? So it will be a bit confusing. That is why simply we are going to specify this rate under indirect quotations. Okay, so still if you have little bit confusions, that is going to be clarified only if you generate your own scenario and do the practice, do the what to say testing the way I have done here. This is how it is going to be clarified. I know that 90-95% of the you have been able to understand. Even the 5%, those who is having still confusion, guys, I'll tell you that you have a practice here and you use some other pairs of currencies also, and then your doubts are going to be clarified, because practice makes man perfect, right? So that's all, guys. That's all in this session, and this is how you have to say. This is what the difference between direct quotations and indirect quotations. Direct quotations is going to be used when the foreign currency rate is higher than the local currency. Indirect quotation is going to be, the rates are going to be specified under indirect quotations only if the local currency rate is higher than the foreign currency. So that's all in this session, guys.